Hello and welcome to XP Power. We're reporting on their interim results. We're joined by the CEO, Duncan Penny, and also the FD, Jonathan Rose. And we're doing things a little bit differently here. We've come into this assembly area, which adds value to the products that they produce. And you would say this is how you make your money. And talking about money, give us the top line figures on the half-year performance.
Well, we're pretty pleased with the first half of this year. The earnings are up 21% over the same period a year ago. I think the evidence is we've continued to take market share. We've won a lot of new programs. The industrial business has done pretty good for us in this period. Healthcare is actually surging forward. Technology back a bit, but overall, increase in earnings 21%. We're very happy with that.
Jonathan, I can see you smiling there, which suggests you're happy. Unusual for an FD. You were predicting an increase in customer sentiment back end of 2013, early 2014. That's continued, has it?
It has. It's seen its way through to the numbers, actually. So on the top lines, we've seen growth of 2% on both our orders and revenues. And although that sounds a little bit underwhelming, the actual underlying figures are much better than that. In constant currency terms, we've seen growth rates of 9%. And that's happened because a lot of our revenues are in dollars, 74% in fact last year. So when you translate that, it doesn't sound so good, but we're really pleased with the general growth in the business this year in the first half.
And Duncan, you know, international breadth and strength can be good, but it also can be bad, especially when sterling is getting very strong.
Yeah, it's very much a dollar business, so we don't really worry too much about the strength of the dollar, really. Jonathan highlighted that we've only seen 2% growth in sterling terms, 9% growth in dollar constant currencies. But when that happens all the way down the P&L, expenses are lower because of that, margins are higher, so we end up with 21% earnings growth. So the international spread of the business I see as a strength and not something to be concerned about.
As far as investment's concerned, you invested in a magnetic components unit in Vietnam back in 2012. How's that going and how's it going to go in the future, do you think?
Vietnam's been really good for us. We've seen very rapid salary inflation in China, so the move to Vietnam was twofold, really to mitigate those cost increases and give us a better competitive cost base, but also we needed to expand capacity anyway, and we're going to start doing the first power supplies in Vietnam in Q3. And as we sit here today, about 70% of what our magnetics requirements we're doing in-house in Vietnam. The quality has been very good and we've been really pleased with Vietnam, so I think it really bodes well in putting us in an even better competitive position as we move forward.
Jonathan, you've talked about the foreign exchange situation now. What about going forward? I mean, obviously sterling is strengthening. How can you mitigate looking to the future?
Yeah, so on the revenue, it's very hard. There is the translation exposure because we are a dollar-based business. But that also is true in our cost of sales, of which 92% of our cost of sales are in dollars and 56% of our operating expenses. So by the time you get to the profit lines, there really isn't the same impact due to the translation effect of the dollar. So we're basically naturally hedged.
So shareholders and investors will be reasonably happy too because you've announced an increased dividend. You're also predicting by the end of 2014 that you'll be cash positive. So what are you going to do with the money?
Yes, we've had a progressive dividend policy. In fact, it's increased consistently over the last 10 years. And we do pay quarterly dividends as well. So a lot of the return is going to shareholders. We are in a very good position, where we are going to move to a net cash position, hopefully by the end of this year. And what we will do, what we plan to do with that is we are looking around for acquisitions. Nothing too big, probably a bolt-on acquisition to increase our product offering. And so some of the cash could be spent there. But otherwise, it is just a case of carrying on returning those profits to the shareholders.
Duncan, finally, you're going to be spending some of that money. What can investors expect and shareholders? Are you going to be capital investment?
Yeah, I mean the capital requirements are kind of modest in this type of business model, so that's why we can actually generate such good cash flow and have had such a progressive dividend policy. Jonathan's already said that it's gone up every year. Also, we pay quarterly, which is kind of unusual, which makes us attractive to a lot of private investors as well, that nice steady cash flow stream. But it's exactly what Jonathan said, looking for good acquisitions. We've done some historically, we'll be cautious in terms of the multiples we pay, but I think you'll see that dividend continue to progress as we move forward.
So finally, I know you're restricted on what you can say at this stage, but just talk about the coming 6 months and in fact possibly the coming year.
Yeah, we have suffered a little bit from the weaker dollar and the translation effect that has on our top lines, and that's likely to continue into the second half. But our underlying growth is really strong, And our fairly fixed operating costs should mean that we can really grow the profit and earnings by the end of this year.
Plenty of nodding from you, Duncan. You obviously agree it's going to be a good period coming up. Do you think you're going to hold market share?
I think definitely. I mean, when we look at how we're performing in the market, we're continuing to take market share from our main competitors. We're winning good new programs at the big blue chip companies that we've targeted. We're quite happy about how the strategy is progressing.
Well, thank you very much for joining us, Duncan Penny, CEO, and Jonathan Rhodes, FD, and also your colleagues here, some of whom are the longest standing employees you've got, adding value to your product. But it's been interesting to hear about XP Power. Thank you very much.
Thanks, Nick.